traded 75 years ago. They read market sentiment on the charts, and when you really look at it, that's all there is market sentiment. A stock is in two places: the strong hands, or the people that are ruthless, that are manipulating the price, or it's in the hands of the weak, the public. So by learning market sentiment on a chart, you're learning to ride the coattails of the smart money. And believe me, there's a lot of smart money. And there's a lot of games that go on charts, an extreme amount of manipulation to get the price where they want it before they take it up. This can all be seen in chart patterns. Okay, CDNS, what a beautiful trend. See, once that price crosses the 8, and then it crosses the 34, so we could have got in here, moving above the EMA 8. We could have bought right here. We could have bought a price pivot low back here. No, price pivot low right here. So there's a lot of places to get in on chart. Let me look at this a little closer. Right here, we could have bought a price pivot low. Right here, we could have bought moving above the 8. Right here, we could have bought moving above the 34 on this weekly chart. So when you see a real nice weekly like this, if none of this was here and we just had this, then you would go down and trade the daily. You might get a better price on the daily. And if that daily looked really sweet, you could go to the 60-minute to get an even better price entry. So this is pretty simple. This followed the EMA up here. I use the 34 because it really does act as good support when the 8 fails, and they do ride pretty close to each other. Let's put in a little tweezer top. Tweezers, they're dangerous on the tops, and they're a heart scent on the bottom. It's one of my favorite candle patterns. It has a very high success rate, and if you just go through charts and looking for tweezers, you're not going to find a great deal of them. But I'm going to show you something, and this is one thing you want to look for. The Japanese they don't have a tweezer, but they do have what they call a matching low, defined in Steve Nisen's book and Gregory Morris's book. I'm going to do a little drawing here so you can see the difference in tweezers. Okay, here we go. Well, I don't know why this isn't working. It's always worked. So we'll omit that for now. And I'll just explain it on the chart. Okay, this is a nice matching low right here. This is a tweezer, but it's not a matching low. These are tri-tips right here. See, different lengths of the wicks. These are tweezers right here. Without the wicks, they're not even. This is a tweezer right here. These are tri-tips, 3 tips facing down right here. And you can tell on this, the doji is a reversal candle. So right here, we come up to the top, we put the tweezer bottom in. We move up, we move down with the tweezer, it moves back up, and then we get all these tips facing down here. These are quint tips, 5 of them. And why wouldn't you get the move up? You could have bought the bullish engulfing candle. Uh, the tweezers, all the tweezers, you know, the tips down were telling you this is going to go up. So you could have bought the bullish engulfing. You could have bought the price pivot low right here, that doji. You could have bought the move when the 8 crossed the 34. So now this is going to go up and tag $8. It's 7.45 now, and then I'll look at it again when it hits $8 to see if it's something that you would keep. I would probably keep it because see this big bearish candle right here? It's going to move up to the top of that, which is about $10. Remember the bear legs, very important in swing trading. As the price is coming up, you're going to look for those bear legs. Always look to the left of the chart. Very important. Here's another one here. So when it breaks this resistance right here, it moves up and takes us out. Look at the bear leg. We're going to go up. This could get up to $14, $15. But not tomorrow. I'm in this. I got in right under $1, and I'm still holding it for a swing trade. Okay, what a nice rounded bottom. That's another pattern we look for, rounded bottom. If you have stock charts, you could go to stock charts and go down here and put in color prices. That's how you get these numbers. And they really help out for resistance. So it saves you a little time. You don't have to figure it out. You know $1 is resistance. When it breaks $1, the sucker's going up. That's simple. Now, there's a couple scenarios. I should retrace that just a little bit. It can go up and fake you out and come back and go below $1. So what you're really looking for is the close over $1 that day. And then we get the gap up right here. Well, I like gaps myself. That tells me they want to take the price higher. And this stock is going to go higher. It's going to break this $2. This is a whole number. Like Frank, I love whole numbers. 1, 5, and 10 in smaller price stocks are the hardest numbers to get over. 1, because it starts bringing, once it breaks $1, consumer confidence starts coming back. $5 because it takes it out of the dogs of the Dow. And $10, it starts putting the price up with the big guys. And then $20, $15, you know. And then you can break that down between a $1 and $2. If you know your numbers, you can break that down into Murray math numbers. I mean, there's just a lot of ways you can do things. DCTH, we were on this at $3, and it's just gone and gone and gone and gone. And it looks great. Notice the tri-tip down here. You know what this says? When you see these on a chart, it says extremely strong support, not high probability. Price isn't going to drop under here. Now, this one here, I could have taken the line all the way across to here. See that? This is a monthly chart. See how it broke above the 34, the 3, 5, and the 8. And then we get up into this consolidation. Strong resistance trade here. It breaks through there. It keeps going up, continuing up. Guess what? Look at that volume. Beautiful. We're going to see more out of this stock. Now, understand one thing with the swing trade, and here's the biggest fallacy I have ever heard. I'll be posting something in my room, and someone will say, I'm not chasing that. Price is too high. Price is high, 10 cents higher than the break point. Well, big deal. You know, you can't look for that ideal buy because you're just going to miss so many trades. So it doesn't hurt to buy it. If you read, what's her name? That gal that's a swing trader. She says in 3 of the books she has written, she says it doesn't hurt to buy higher. Actually, sometimes it's better to buy a little higher and then you sell higher. Tony Turner, that's her name. So all along, I know you guys are watching the volume bars here. Because that relationship between price and volume is critical. Okay. A very good trader, Tommy Lakota Eagle. You've probably seen him on Twitter. He posted this chart, and I did this daily chart on it. Very simple. And it has just continued up. See how nicely the 34 supports? Actually, no reason to be out of this trade from this break point. And if you did get out, you could get out on the price pivot high right here, but you'd be ready to get back in right here. And when these prices come down, there's the critical thing you want to watch, the volume. The volume has to diminish. If it's high volume, then look out below. So you want to see diminishing volume, and this has continued up very nicely. Once you learn how to swing trade and become proficient at it, then there's a point where there's the artistic part of trading, where you can see things that, you get a feel for things. Other people can't see that. And that's why other people don't have an understanding. So, it's good to learn all you can and keep going at it, and you will become that same way. Okay, ascending channels. These are simple. This is also a little cup and handle right here. See, price pattern, ascending channel. You could draw a trend line straight across that way and do it that way, but I chose to do the ascending channel. Breakpoint was $5. Now it's made what we call an inverted cup right here with high volume. So we look at this, it looks to me like this $5 should hold it. Get a little consolidation there, and this will go up from the $5. There's some stocks that you get in, you just stay in them. The downfall of a swing trader is patience, lack of patience. So you really have to use that moving average. Look at that. This is where we had this at a